Hello, everybody. Welcome back to Univesco TV. So, week 4 today, Mauro. Congratulations. It's been a month since we started this weekly Zoom session. So, I'm here in Bali, Indonesia myself. Mauro is joining us from Shanghai, China. So, Mauro, the background doesn't seem familiar. Whereabouts are you today?
Thank you, Rishi, for having me. It's very nice that we get to this fourth week, and looking forward to carry on for the weeks to come. Yeah, actually, today the background is quite different because tonight I am in a hotel room. I'm at the Holiday Inn in Songjiang. Basically, Songjiang, for the viewers who maybe are not familiar with Shanghai, is a neighbor of Shanghai in the suburbs, but it's basically like a separate city in the region, in the whole region of Shanghai. I had some troubles at the registration office for some documents. They asked me to come back here, so avoiding to go back and forth from Pudong, I decided to stay out for the night, and here I am.
That's great. That's good. I do enjoy Songjiang city. So, for the viewers, there's also a British town, Jamestown, which is called. And that's also based in Songjiang. So, Mauro, if you got a chance tomorrow after your registration is complete, after your official work is complete, go ahead and check that out if you get the chance. And Songjiang is a very beautiful part of Shanghai where it's very peaceful and very quiet. So, Shanghai is all bustling. It's like a metropolitan city. It's like London, so it's like New York, whereas Songjiang, you're away from the city, but not so far away. It's like an hour's drive from main downtown Shanghai. Very peaceful, very quiet. Couple of nice parks, lots of malls, places to eat. So Songjiang would represent, I would say, Mauro, you can correct me if I'm wrong, the 100-year-old history of Shanghai. So Pudong is probably like 10 or 15-year-old history of Shanghai, maybe 20 years. Pudong represents modern Shanghai, where Songjiang represents the traditional Shanghai, the ancient Shanghai. Maybe I'll say Puxi probably represents 100, 150, so Songjiang probably represents 300, 400, 500-year-old history of Shanghai. So Songjiang is a great place to check out, and for our clients and for potential clients, Songjiang is where we register your company. So when you incorporate a company with myself or Mauro Services, we'll register your company in Songjiang. And the reason why we do so is that Songjiang is in a bonded free trade zone, so we get additional tax benefits and tax advantages for our company. My company is also registered in Songjiang, and Mauro's company is also registered in Songjiang. So the Chinese Wafi, they're registered in Songjiang district of Shanghai. So Mauro, today I'm going to talk about the humongous returns that some day traders have experienced. When I say day traders, I would probably be overestimating them or probably like overvaluing them in a way that they are a bunch of chat room traders who are literally interacting with each other over a chat room on Reddit, over some other social media tools, and they're inflating stock prices of companies that have low valuations, that have weak fundamentals, they have been shorted by major hedge funds, major financial institutions in the last 6 to 8 months. And these retail investors, retail investors are coming along, interacting in chat rooms, and they're sending those shares on a different level. For example, AMC Corporation was up 300% in yesterday's session. In the last 5 days, it's up 552%. GameStop, I want to particularly mention GameStop. Now, Mauro, I don't know how much of a gamer you are yourself. My younger brother is a huge gamer. I remember going with him in Ireland and also in the UK, buying games for himself as well, going into GameStop and just purchasing games for PS4, PS5, PS3, Xbox, so on and so forth. And it's a nice shop. It's a great business in a way that, yes, it's a retail business, but retail is down these days. Overall, retail industry is down in Western Europe. Here we have GameStop that only sells games.
Totally.
Only sells games, second-hand games and consoles and brand new games and consoles, and that's pretty much it. And the stock price of
Yeah,
GameStop,
I would say that. I would say that it is the equivalent of Blockbuster, like a Blockbuster for the movies
exactly,
in the past.
as like when,
But like Blockbuster, like left years ago. I actually, before this happened, I thought that also GameStop like was not in the business anymore. Actually, I got this news looking on Facebook to some memes. And I was like, what the hell is going on? And then like I had a look at the news, and I was like very surprised of what was happening. But I'm sure that you can explain that better than me.
exactly. So GameStop, the shares are up 766% in the last 5 days, Mauro. 766% returns. Now Tesla was up 784% all of last year, 2020. Now Tesla, even though the balance sheet doesn't represent any income in the sense that Tesla is a loss-making company currently, but Tesla has products in line. It's a business that might recover. Not necessarily recover. It's a business that will grow profitably in the future due to the amount of car sales that it's going to have over the next 5 years or so. And they're opening up plants in India as well very soon. They have opened up a huge gigafactory in Shanghai. So Tesla is a business that's going to generate revenue going forward. Whereas GameStop is struggling. It's a failing business in the US, in the UK. And the shares are up 766%. Another stock is Cost Corporation. The shares are up 1,358% in the last 5 days. So now, the most common factor among all of these stocks was that they were all short squeezed by major financial institutions. So these chat room users, they went on Reddit. They were starting to look into, because most of the hedge funds, when they do their regulatory reporting, regulatory filing, they have to mention of their positions, such as where they're short and where they're long in. So these chat room users, they went ahead, these so-called traders, they went ahead, saw the list of the companies that are shorted heavily. They went in and went on the reverse trend and started purchasing more and more. Now there's an app in the US called Robinhood. Robinhood simplifies trading for the average investor, for the average user, for the average trader. So these people, these kids, or these users, they have been going ahead and literally purchasing stock on Robinhood or most other trading platforms, not your traditional trading platforms, not your traditional brokerage firms such as TD Ameritrade or Lloyds Bank in the UK or Barclays or whatever. They're using these apps and going ahead and literally changing the market dynamics. We live in efficient markets. I thought we were living in efficient markets. Markets are following the trend. But whatever is happening in the last couple of years, I don't believe the markets are efficient. Now, there are a dozen ways to pick stocks, Mauro. Like I always tell you as well, if you want to go ahead and invest, Mauro, and there are certain particular risks involved in investing. Then there's also a portfolio that has to be constructed. There's a time horizon. There's a risk management aspect. There's an aspect of how much money you're willing to invest. When do you want those returns? There's so many factors when you're investing. Market factors, economics, interest rates. They all depend on what kind of stocks you want to invest in. Where do you want to invest in? Whereas these traders are going ahead and they're just literally picking out those positions that are short squeezed and going on the opposite trend. So whatever the most hated stocks are on Wall Street, these traders are going in on the opposite on those stocks. Now, it's simple, okay? It's not intuitive, but look at this. You go ahead on a chat room, you pick out, using those regulatory filings, pick out a company that is short squeezed by all these major companies, major hedge funds, major financial institutions. And then as a team, collectively as a team, as traders, you go in, join the trend and start purchasing more and more. Supply and demand. The more you purchase, the less supply, more demand, less supply, therefore increasing the stock price. Now, 139% of GameStop shares were available or were sold short. 139% of the shares. That's how badly short squeezed the company was. These traders are coming in and being able to change that. Now that is good. That is good in a way that I'm not advising to my clients. I'm not this, by the way, doesn't constitute any financial advice.
So this is something that
how they're changing the market dynamics. I'm trying to understand how is that possible. Like, what kind of markets are we in? What kind of world are we living in? How can some users on a chat room be able to dictate the market conditions? Now, major hedge funds such as Citron Research and Melvin Capital have had to abandon their positions. They were short sold on these particular stocks, and they had to abandon their positions because they were making losses in the tunes of billions of dollars. So it's beyond me in a way that, like, how we're living in a... I'm all for capitalism. I'm all for fair market. I'm all for, like, let the market dictate the way the market is supposed to be. But I feel like even Biden said yesterday, Joe Biden, president of the US, said that he's going to intervene. His team is going to intervene, and they're going to look into how this happened and try to come up with some regulation to be able to promote that. But Mauro, yourself, like, you watch memes. You're always uploading some memes on Instagram as well. Just by memes, kids are able to dictate the markets, dictate the stock price. That is beyond me. And I personally feel, as a financial analyst, as someone who works in finance, I'm not particularly happy about that, because they're literally driving all of economics out of the window. They're driving finance out of the window. All they're doing is having a chat on a chat room, on social media. Who knows, tomorrow, like, some kids might be on social media such as TikTok and start, like, recommending stocks. Start recommending, like, let's go over and let's do this and that. Now, there's about 2.8 million members on that chat forum, reddit.com. That's a lot of people. If 2.8 million, even half of them start buying in and positioning and start sizing in their position, that's enough to move the stock a little bit. And the problem is, Mauro, it's also engulfing the options market. There are smallest of the traders who would buy 10 or few contracts. So with options, you buy contracts, not necessarily stock, not necessarily shares. So, like, as an average trader might buy 10 or 15 shares, 20 shares, they might buy 10 contracts. And now we're seeing those contracts going in the tunes of thousands and thousands, because they're going bullish on them. They're going bullish on those options. So,
can I ask you a question?
Sure.
In your opinion, how is this different from basically from buying Bitcoins? Because, also Bitcoins and the other digital currencies, if we want to call it in this way, they are not based on on an actual company or some sort of counterpart. So their value is based on how many people believe that it has value and how many people go there and buy or sell stuff. And basically this example is a company that eventually doesn't, the shares are not, their value is not a counterpart of the actual, production in a way. So, like, what is the difference and the similarities that you see in this case?
So I'm glad that you asked this question, Mauro. Now, I'll tell you this. So Bitcoin as a cryptocurrency or other cryptocurrencies, so the traditional currency, the fiat money that we call it, dollars, pounds, euros, they're in the past based on the gold exchange, gold reserves. Okay, that was the past. Now they're regulated by central banks around the globe. They're regulated by money supply. They're regulated by monetary policies, interest rates, so on and so forth. Traditional currency that we're currently using right now. Digital currency is the way to go forward. They're trying to change the trend. Now, I personally wasn't a big fan of cryptocurrency, but now I'm trying to change my thinking and my mindset, because crypto is the way to go forward, I believe, going forward in the future. Now, will it be there in the next 10 years, 5 years, 15 years, 20 years? God only knows how long it's going to take. How long is it going to take to totally replace the traditional currency? but it's one of those asset classes that you're bound to include in your portfolio, albeit maintain the risk. My dad messaged me the other day, Bitcoin has touched $40,000. Be careful. Don't invest so much money. I'm like, I might just for the laugh, invest a little bit of money, just the money that I can afford to lose, just to understand how Bitcoin is working. Now, it's not a fundamentally driven asset class, such as your shares of major insurance companies, banks, healthcare companies, pharmaceutical companies. But Bitcoin is driven by speculation a lot. Yes, a lot of traders are making money. Whereas with Reddit, what they're doing is they're literally picking out companies, these traders, that are cash strapped, companies which are not fundamentally strong. They're companies not generating revenue, and being able to skyrocket a share of 766% of one particular company in 5 days. Now that is something I cannot understand. I cannot fathom, because at the end of the day, what is happening is, okay, with Bitcoin, there's a talk of the town. There's only 21 million coins in supply of Bitcoin. So there's a supply and demand reason. There's only so much. There's a finite supply. It's like gold. It's like crude oil. These supplies will eventually run out. Whereas with these particular stocks, these companies are failing. It doesn't make any money. Just like yourself, I was also, there's this particular Indian fellow that I follow on Twitter, and I was just checking up on his tweets, and then there's this one or two meme accounts, Wall Street meme accounts on Instagram, and they take his tweets and they convert into memes, which is pretty easy these days. And they were saying that Elon Musk is the richest. He was saying that Elon Musk is the richest man in the world. It makes total sense, because Elon Musk is an owner of a company that has no revenue, and he surpassed Jeff Bezos, who's the owner of Amazon, which is generating billions and billions of dollars in revenue. So I hope you're trying to understand how the markets are working these days. So to answer your question, how is this different from cryptocurrency? Cryptocurrency is working on a medium of exchange format. There's so many coins, there's so much speculation, people are driving the price up and down. And the more people are becoming aware of it, therefore the price keeps increasing. There's a time 10 years ago, Bitcoin was worth a couple of dollars. Now it's nearly $40,000, $35,000. Whereas with the stocks now, what they're doing is it's highly speculative, but it has no value. The business is not making. Now tomorrow, if GameStop starts generating millions and millions of dollars in revenue, new games come out in the market, they start selling more games, I'll be all for that. It's a fundamentally strong company that's generating revenue, such as Apple, for example. The results came out of Apple. They've sold more iPhones than ever, as always they do. And they've sold more iPads than ever, blah, blah, blah. So the sales figure is strong for Apple. It's a fundamentally strong company. I would be willing to invest in Apple. I'd be willing to invest in Amazon. Whereas when it comes to these kind of companies, GameStop, it feels I've just missed a trend. I should have bought the stock, which was trading at $4 last year, summer last year, 6-7 months ago, and now it's nearly $350.
I see. But eventually in this case, either you are lucky that you had some of this in your portfolio, but I would say that it's quite risky to enter this game now, because now these 5 days went up, but you don't know if Monday everyone will stop believing that the market, that the shares will go up and everyone will sell. And if you put $100 or 1,000, you can you can lose all of that. So what do you think?
So basically, see, at the end of the day, this is all gambling, okay? This is not necessarily portfolio construction. So people are investing in potential clients, anybody who's thinking to go ahead and invest in GameStop or these companies, stay away. I would advise stay away. They're highly speculative. Unless you're willing to risk the money, unless you're willing to gamble, they might as well go to Vegas or something, gamble there, or go to Macau if you live in China. But from a fundamental point of view, these companies, nobody really knows. So I wouldn't necessarily go ahead and invest in GameStop or the other company. You see, that's the thing, even the company, I forgot the name, AMC Corporation. So I wouldn't necessarily go ahead and start. They're highly risky. They're highly speculative. So this is not the time to go ahead and start investing in these kind of companies. Starting off, constructing your portfolio, making a portfolio, make sure the portfolio is strong enough to mitigate lots of risks, a lot of other factors. So therefore, the portfolio has to be diversified, as you always mentioned me, Mauro, myself and yourself. And this doesn't consist of a diversification strategy by including GameStop or something like this. Now, if you've got like a couple of $100 or $2,000 to spare, you want to burn the money, go ahead and start investing, see how it goes. There's a meme on Reddit and also Instagram. One particular person risked all his dad's life savings of $70,000, and he invested into BlackBerry shares. Now, Mauro, you know yourself, BlackBerry 14, 15 years ago was the thing. For business people not to have a BlackBerry, you weren't a businessman. But nowadays, nobody cares about BlackBerry. That particular kid, 19-year-old kid, gambled $60,000 to $70,000 of his dad's money. He said, you only live once. It's either retiring. Yeah. He actually literally wrote, it's either retiring in a boat or retiring using food stamps. That's his mindset.
Oh my God. Well, yeah, anyway, we should stop saying investing like at this point. That is totally gambling. Like we should change the dictionary in this case, because this doesn't qualify as investing.
Exactly, that doesn't qualify as investing. It's totally gambling.